if you think that there's a high risk that there's going to be like a recession or something like that, or some sort of crisis, then people go to the safest asset in the world, and that's the 10-year Treasury. You buy it, the price goes up. As the price goes up, the yield goes down, and this often leads to an inversion. So why is that? So I started to look at banks in general, and I found that if you look across all banks in the US, the rate on average is about 70 basis points, still less than 1%. And then I looked at the too big to fail banks and noticed they're all in around my bank, which is 2 basis points. The most generous too big to fail was Citibank with 5 basis points. Okay, so what happens? Well, you realize that you're getting a terrible rate and you pull your savings and put it into a money market mutual fund and collect more than 5%. But when those deposits go, it creates a future credit squeeze. There's not as much to lend out. When there's not as much to lend out, that means that many good projects are not going to be financed. And this feeds into lower economic growth. But we don't see it immediately. It's with a lag.